Off-ramps are not solved. And I know everyone that probably comes on here talks about that, right? But for us, that last mile delivery is where utility can be unlocked today. We built this huge network for 20 years all around the world to deliver money into these markets. How do I connect that up to the stablecoin infrastructure and wallets today to really unlock at scale that value?
Why is it so hard to solve and why is it not solved yet?
Happy flow, everything's great. But actually, some of those unhappy flows are really painful.
How do you guys think about just the market evolving?
Right now, there's a load of businesses creating really cool stuff, but I still feel that some of it's optimizing for stuff that doesn't deliver customer value. When we look at most of the businesses on our platform, most of these early conversations we're having is, I want trust, I want a simple solution that integrates with all the other workflows that I have as a business user.
What are the key things that need to happen?
Views are personal, not investment advice.
This is Money Code. It's a show where we decode stablecoins and agentic finance. I'm Chuk, Okpalugo.
And I'm Parekh. And today we're joined by Rowland Berry, VP of Strategic Partnerships at Payoneer. Welcome, Rowland. Let's jump in. I think there's been a series of really interesting announcements from Payoneer. One, you guys partnered with Bridge to launch stablecoin capabilities. You guys also filed for your OCC charter to issue your own stablecoin, which is really big as well. Two massive moves. What's driving the urgency, and what are you seeing change in the payments landscape also?
Oh, well, look, thank you both for having me on the show. Urgency is an interesting question. I think we've been looking kind of from the sidelines at the space for a while. I think if you look at Payoneer, we're a cross-border payments platform. We have nearly 2 million small businesses on the platform. We're heavily regulated in many markets around the world. And we've been really excited by the innovation that's been coming through. We truly believe that stablecoin will drive material kind of upgrades to some of the technology and infrastructure in the space. But there's some real kind of meaty questions around how do we actually unlock value for end users? So that's small businesses on the platform. How do I do that in a compliant way, in a trusted way? And really our vision is that we can make the stablecoin benefits interoperable with fiat. And so obviously Genius last year was a big unlock, like everyone in the space has been referencing. I think also looking at the maturity of some of the providers, you mentioned Bridge. We spent sort of a good 18 months in the space, talking to as many people as possible, trying to really validate what is noise, what is exciting innovation and optimization for something that is going to drive value, and what is a nice to have. And so I think a couple of unlocks have helped us actually materially move this forward, both in the regulatory clarity and in the technology and maturity of players in the space that we could actually launch a product.
Right. And you mentioned a few things there, particularly in terms of trying to figure out what actually moves the needle for customers. Maybe we can just start explaining to folks, how Payoneer works, what it does, who the customers are that you're thinking about this innovation from.
Of course. So if we look at Payoneer today, we have, as I said, 2 million businesses on the platform. These are SMBs, typically in emerging markets. We're helping them collect their earnings, their funds from wherever they might be selling. Typically, a lot of that's in USD. They're holding those funds in our platform. They're able to access essentially an operating system for other financial services inside that platform, whether that be from working capital, card products, contractor management solutions, etc. And then we're allowing those businesses to essentially off-ramp from our own platform through local rails. We spent sort of 20 years building infrastructure in a lot of these high friction markets and corridors. We're serving essentially a segment that's typically been underserved by some of the larger banks in these markets, and that giving them access to sort of dollar. So a lot of that has high synergy resonation with a lot of the stablecoin proposition. Today, we kind of transact about $90 billion across the platform. At any one point in time, there's around $7 billion in customer funds that sit there. And so we are very beholden to the compliance infrastructure. We're very, very focused on all of the operational flows, all of the sort of trust and regulatory management, as well as actually ensuring a customer gets value at the end of the day. And really, this is kind of the exciting part here. So customers for us typically care about, can they get paid quickly? How much is it going to cost them? Does it integrate into their business workflows? And these are some of the bits that we're trying to bridge now with the stablecoin infrastructure.
Yeah, it's interesting just thinking about the scale also of Payoneer. If you go down the list and you look at some of the logos that you guys work with, right? I still remember the time that I attempted to be an Airbnb host and seeing one of the options were Payoneer also. So it's not you guys are only working with SMBs, but these are like large marketplaces and enterprises also. Maybe if you can just walk through just like what does that transaction look like? I mean, and maybe describe, what, if you mentioned all, 100, there's like 190 plus countries. There's all these different corridors and these local markets that you guys have built connectivity to. The local, regulation or banks haven't quite tapped into the global economy yet. Like maybe just like walk us through like the complexity of this overall operation too.
So happy to. If you look at the platform, you alluded to Airbnb and there's a few other sort of marketplaces that we help them essentially distribute their funds to their suppliers and sellers around the world. If you inverse that, obviously those small businesses that we're serving are able to collect their earnings and things from that platform. What sits underneath all of those relationships, as you implied, is the infrastructure. And so whether that be the licensing in the US and the regulatory footprint we've been building and acquiring in other markets, that is like paramount to have the confidence of a platform like an Airbnb or an eBay. On the other hand, in terms of building local market connectivity, it is a couple of things, right? There's a trust factor. There's deep knowledge of how these payment systems work. Not every payment is the same. If we're sending a third-party flow versus a first-party flow, if the source of funds is a certain type of source of funds, different routes essentially are available. So underneath our infrastructure, we've had to kind of abstract away that complexity across the platform in a lot of these markets at scale. I wouldn't say everything is super simple, but I think like when we look at Stablecoin and how we've been thinking about the integration of the two, actually how you run a payment operations business, how do you manage RFIs, what do you do with returns? Like this is what has taken us years and years to build at scale for the fiat world. And these are a lot of the questions that we had when we were looking at partners, providers, solutions in the digital asset space.
Can you break down then what of all the things you looked at did you see the most potential for stablecoins? And maybe it'll be helpful to set the scene for folks by kind of talking through Payoneer's business model. Obviously you facilitate cross-border business. And I think when people talk about cross-border, that's where stablecoin comes in to make those things more easier to facilitate. But how does it work from a business perspective? And looking through the parts you mentioned, returns and customer service, and then also compliance, I'm sure like you kind of did a list of this is where stablecoins help, this is where it's just all hype. We'd love to learn more how you came to the conclusions you did.
Yeah, so if we look at the business model for a second, and then I can unpack kind of how we ended up choosing partners or our success criteria. I think if you look at us today, as I said, we're a payments business as a platform. On top of that, we've essentially built an application layer, a financial operating system for these small businesses. We started, obviously, at the beginning with moving payments. How do we make it faster, cheaper around the world? There's obviously a transactional component to how we generate revenue through that. Then as we've added in new products and services, we've obviously moved towards more of a cross-selling motion as we look at more of this operating system of services. When we think of stablecoin, I think a couple of the North Stars that are interesting to us. One is on that infrastructure perspective. Can I improve the cost to serve inside of my own money movement network? And we've started looking at some projects there. I think the second bit is utility. And so we spend a lot of time interviewing customers in different markets. These are, think of a marketing agency in Brazil, an e-commerce seller in Hong Kong, a web development shop in Ukraine. We spend a lot of time with these businesses understanding why, well, one, do they use stablecoin today? Do they know what it is? I think there we sort of saw some that are very crypto native, others that are like curious, maybe fast followers, but there's definitely a trust issue there. But when we start to look at these businesses and what is important to them, one of the biggest things that our view is another FX rail to some extent, right? You think of like APMs on other platforms. I have customers that need it because their trading partner or their supplier is essentially demanding it. They don't necessarily want to be using these products, but to them, it's just a necessity of a B2B business trade. I think there are others that when we launched a waitlist earlier this year, and I can talk a little bit around like our product and strategy, but when we launched the waitlist, a lot of the early conversations were, oh, hey, this thing is kind of like, sounds great, but will it get cheaper payments? Or, oh, hey, great, is it true it will take seconds? And this is kind of where we're spending a lot of time right now. And as you alluded to, it's not a silver bullet. Certain corridors are better than others. I think a lot of what our thesis is around is really like off-ramps are not solved. And I know everyone that probably comes on here talks about that, right? But for us, that last mile delivery is where utility can be unlocked today. And so we're spending a lot of time thinking about, we built this like huge network for 20 years all around the world to deliver money into these markets. How do I connect that up to the stablecoin infrastructure and wallets today to really unlock at scale that value? And I think that's one of the really exciting short-term like pieces for us when we think about our business model. Longer term, yes, I think who knows where this unlocks new business models, new revenue streams. I'm sure there's posts everywhere around kind of all the product innovation. But I think we need to get good at the basics first, have it fully integrated into customer workflows, into the product suite that we deliver, whether that's card, whether that's some of these other services. And then we can start looking towards some of these kind of more niche and interesting innovations.
Yeah, that makes sense. So you've got the internal kind of treasury money movement operations, and then obviously the customer demand. Many of them will be using stablecoins or want to use stablecoins in their business, and then there's lots of other use cases that may come about in the future. You mentioned on-off ramps and the challenge that exists there. Can you just go into that a bit? What is the problem, and why is it so hard to solve, and why is it not solved yet?
I think it's a big topic. We'll give it 2 cents on it, right? So I think when we look at some of these markets, obviously every market's different. I think from a regulatory perspective, the operators that are in a lot of these markets are operating under very different regimes. And clearly, stablecoin regulation is coming and giving greater rules to play by, but it's still not equal everywhere. And I think one of the biggest roles that we've spent a lot of time with our own network over time is talking about source of funds. Like, where has this money come from? What is the reason that it's transacting through? And providers have different appetites for those flows. Just because you say one market works, it doesn't necessarily work for everything. I think when we look at digital assets, this is definitely in the gray area where a lot of businesses are unsure on how to treat it, deal with it, the comfort around it. We've seen, obviously, some networks come online, but I think they're still struggling a lot with how they drive that interoperability. I think what's exciting for us when we look at trying to unlock this is that we've built trust and relationship with a lot of these last mile banks and PSPs that we leverage today. We run a lot of the kind of compliance and monitoring systems internally around who those customers are, the behaviors of those customers. And as we look at how we're leveraging stablecoin, it's actually basically to augment the current business flows that we see today. I'm still going to help a Colombian marketing agency collect their earnings in the US and pay for Google Ads on their card. I'm just introducing essentially a new infrastructure or currency rail into that dynamic. But these are still businesses that I know, that I trust, that I've onboarded. And so as we look at that, like, there's a huge component in how we think about those last mile routes that we're excited to unlock. I think the second question is liquidity, and obviously the pre-funded model has been around a long time. When you're operating at scale, clearly there are benefits and ways of managing that. But some of those some of those really long tail markets can be very challenging. And today, for stablecoin liquidity, there's still not a lot of liquidity to move from some assets into local market. And ultimately, that small business wants to go and do something in the real world with their asset. They want to go pay for whatever it might be, their meal at the end of the day, or their clothing, or their business suppliers. And I think for us, that's the kind of like constant friction that we're trying to manage as we look at scaling our product.
Yeah, I think what I love about the entire process of what you guys have done here at Payoneer, Rowland, is that you guys evaluate everything from first principles. It's not like, let's just go rush to this whole stablecoin bit. Let's like actually take a step back. Let's evaluate. Let's talk to our customers. Let's talk to the end users that are receiving these payments also. And then from there, like, you guys have obviously built this established network and all this infrastructure on the ground across all these different markets. Like, how does all this tie in together? And I think that's where you're really just unpacking, like, what's the problem that we haven't solved fully today, even though, like, you guys have been doing this for 20 years. It's like payments is so deep. Liquidity is not just, throw a bunch of engineers at it and go figure it out. It's something that you have to like really develop over time. So like, kudos to you guys for just taking like a first principles point of view on just like how to, come into this. But I think what the area that I'm like really curious about is that there's a business model for Payoneer today that you guys have made, billions of dollars on, and you guys have been doing this for many years. There's like a business model in the future now with stablecoins kind of packed into it too. And you've kind of talked about, hey, we're going to layer in like all these rails. We're going to be agnostic of all of them today. It doesn't matter whether it's stablecoins or fiat. Like maybe just describe just like one, the existing business model for Payoneer, and then like what are you guys looking to accomplish with stablecoins as like a new model in the future?
So I appreciate that. It's been a journey on entering the space. I think, as I alluded to, and we can talk through how we're sort of sequencing even now how we continue to enter, because we've made some announcements, but there's definitely a journey inside of that as we look to find real value for these small businesses that we serve and some of the platforms. When we look at the kind of impact on model today, it's not that we're thinking that stablecoin will necessarily unlock a new model. Like let's see where we go over time. But I think today we're really excited about how it augments what we deliver for small businesses in these markets. And what I mean by that, right? So these customers are looking for benefits in speed, in cost, in currency. We believe that we can deliver that through upgrading some of the infrastructure in a trusted and compliant way. Obviously, that helps us in some segments penetrate deeper into more crypto native businesses now that look a lot like the customers we already work with. So perhaps a newer marketing agency has started day one in stablecoins. They're happy managing their own treasury in stablecoins. We want to be able to serve them in the same way that we serve other businesses with the same business models today. For us, it's still very important as we continue to build out this financial operating system for small businesses that we have the ability to deliver essentially that receive, hold, and send in the asset of their choice. I think I can talk a little bit about how the bank helps us unlock that and the trust charter we've applied for. But as we look to the future, the business model is not one that we're changing or doing something different. It is actually an evolution of the infrastructure we've built in the same segments that we're seeing good stablecoin promise, and perhaps we should talk a little bit about where that is. But we see it as an accelerant, as a really interesting innovation to some of the older technology.
Yeah, let's talk about that. What of the many stablecoin promises that are often overhyped did you find to be reasonable and rational as you apply them to your business?
So look, like when we think about our strategy and our approach, we launched with Bridge, as said, at the start of the year. Part of that was clearly time to market. We are leveraging their infrastructure, their licenses, etc. We still do a lot in terms of KYC and everything else, but really North Star there was product out in the market, inside our ecosystem. Distribution is obviously so vital here. But given this is an infrastructure that we're talking about, the value that it might deliver in Latin America to a small business is very different to what it would offer perhaps in APAC or in Europe. And so for us, we wanted to be able to get something out in front of customers, have real contact, and actually get down into the weeds of where this is unlocking something real. And it's an interesting conversation, right? So yesterday I spent some time with customers. Some of it's perception, right? Like I could use fiat for what they're talking about, but actually they want stablecoin. I don't think I need to be right or wrong in that conversation. I just need to give them what they want and how they want it. So that's been a really interesting kind of learning curve. I think in other markets, we are seeing some speed benefits for sure. I would say speed in terms of getting receivables into that wallet, holding those funds. I think there's still a big question over what does speed look like when I want to withdraw those from the digital asset ecosystem. So as we work to unlock more off-ramps, we still have those challenges around what does it look like when I can remove some correspondence in that flow, but if I'm leveraging liquidity partners, if I need still off-ramp providers because it's a named business transaction and I need to connect to a local scheme, I still have some of this latency in the flow today. And this is us trying to use stablecoin infrastructure in the current model. Cost, let's see. I think it's some corridors it could be very interesting and exciting. In other spaces, perhaps less so. I think let us see as there's more scale and volume in the space, what that comes to.
Okay. And so the answer is, it depends, right? And I think the clearest one you mentioned so far is, hey, there's a set of customers that look like the customers that we already have and know how to onboard, who want or who are already more crypto native. We can now onboard them. So that's like a net new business. And then on all the other kind of key selling points for stablecoins, cheaper or faster, the answer is, well, sometimes it is, sometimes it isn't. It is if you keep things on chain. We're still figuring out the on-off ramp to take things off chain. And so I think it's really helpful to hear, from someone who's like fully into the space, really thinking about how to build this on top of the existing infrastructure, that, hey, it's not we know it's not a silver bullet, but the nuances of where this is helpful and where it may go is helpful. You mentioned bridge. Oh, yeah, go.
I was just going to say one thing. I think that you brought up there, right? Like, one of the biggest feedbacks that we've seen, and again, think of Payoneer, we're dealing with businesses. So this is like their business earnings. These are funds that they're running a business most of the time. They don't have big finance functions. Some of them are more tech savvy than others. They don't want to manage multiple different systems. They don't want to go and deal with an exchange. They don't want to worry about like managing keys and the security impacts. Yes, there's a subset of those early adopters that are there and fully native, and that's really exciting, really great. But actually, when we look at most of the businesses on our platform, most of these early conversations we're having is, I want trust. I want a simple solution that integrates with all the other workflows that I have as a business user. I don't want to have to be managing like all these different like accounts on different platforms. I want to be able to manage the accounting, the tax. I want to get paid, pay my contractors, pay my suppliers. And like, I know it's not super sexy for this audience necessarily, but that's the reality, right? Like these guys and girls are running companies. And so I think for us, that North Star is, how do I abstract the complexity and deliver the trust? The speed, these other like intrinsic benefits are great, but it still has to deliver up as an end user benefit.
It's such an interesting point that you're making here, because something that I've been thinking about a little bit more is that payments is like a risk management function for a lot of businesses. It's like non-core. It's like, a marketplace is their goal is to have like the best supply and demand, beautiful like e-commerce experience. And they're like, damn, I have to get paid also, or I have to pay out this host or this creator, this designer, whoever that might be. And like they just spend so much time building up this core product. And now you're asking them to go build out this FX engine or like these payouts operations also. So this is where like for them, it's like, this is just like a risk management function. Like I just need to like trust someone that can take care of this for me. And then for you guys, like, I think you guys are like have the opportunity to say, hey, we can take this load off of you from a risk management standpoint, but also now we can innovate and we can add new things to make it even faster, cheaper, whatever that might be, unlocking more corridors also. So it feels like you kind of hit it like nicely. And something that I've been thinking about quite a bit is like this thinking of like payments being risk management versus like an actual innovation component also.
I think that's the exciting bit. Like there is innovation for definitely real benefits. Exciting to see how it goes. But ultimately, if we look like 3 to 5 years out, like some of this stuff really needs to become not even discussed anymore, right? Like if for it to become fully interoperable, it needs to be in the workflows. It needs to be managed in the operational flows that we have. Yes, they may get improved. Yes, they may be more efficient. And that is really exciting when you're running a payments business. But our customers are not thinking like that. Like if I can improve the way in which I handle a lot of that back office payment functionality, that's an amazing value that I can deliver to customers. But that's what we mean by utility. Like, how do I actually unlock value for those end users?
Yeah, I want to come on to the bridge partnership and also the OCC trust. But you did mention something there that I want to dig into, which is payments is, operations. The businesses are trying to run their business. You want to make it as, streamlined as possible and kind of abstract things away. For that, you need to be able to automate a lot of the infrastructure. So we talk about programmability a lot with stablecoins. We didn't quite mention that today, but I thought now might be a good time. When you're looking at the infrastructure and some of the other benefits, do you look at it also from a lens of, hey, well, it may not be cheaper, it may not be faster, but we can automate it more and therefore achieve our goal of abstracting this for our businesses and therefore becoming more of a financial operating system? Did that come up much when you were thinking through, the implementations?
Say Payoneer in general has a lot of efforts, as you'd imagine, looking at kind of automations, AI applications, and both from internal process, but also from how you can build customer-facing products. I think when we looked at Stablecoin, inherently there were interesting conversations to have. I think understanding where those become real-world use cases that we can benefit from is still being developed. I think our North Star was, how do we get core value to customers? How do I unlock some of the promised value of stablecoin in a trusted, compliant way? How do I think about it at scale and solve for interoperability? I think actually a lot of the mid-office, back-office flows that we have today for fiat processes, as they are improving, becoming more automated, etc., that convergence is super interesting. But I think our North Star when we were looking at the space was, what is the value that this delivers either to internal users or to customers? How do I do it in a trusted, compliant way at scale? Believing that there will be a convergence in obviously the different approaches to technology and assets over time anyway. So it was a criteria, but it definitely wasn't like one of the North Stars when we were working on that.
Maybe something for the future. Okay, so the bridge partnership and then the trust. So maybe you can talk about those two things. What drove it? How do you think about it? And what is it going to unlock?
Yeah. So as I sort of said, we spent quite a lot of time looking at the space, tracking the space, looking at opportunities. We started with the bridge partnership. We were super excited to get that out at the start of the year. For us, that was an essence of getting speed in the market, choosing someone with pedigree in B2B and payments that we can start learning from customers. Like, where is value? Where is product market fit? Where does this deliver actionable benefits? How do I get people inside Payoneer learning from some of the innovation, the data, the way in which these systems work? And the quickest way for us to sort of get out into market was obviously choosing a partner such as Bridge. I think as we look to the next kind of iterations of that, one I kind of mentioned a little bit is how do we connect our infrastructure today? So all of those off-ramps we have around the world, our compliance, all of these systems, obviously we want to have full interoperability as our vision here. And so we've already started down that process, trying to unlock that for customers. When we come to the bank charter, we filed for the trust application, and our view really there, we were very excited about that for a couple of reasons. One, it gives like regulatory clarity. It's a higher grade probably of how we can deliver that trusted and compliant solution to our businesses. And so that, again, going back to where we started from on those first principles, is like, how do we do this in the most robust, secure, trusted way? The second piece was, how do we actually think about our system actually? So when we look at traceability, we look at source of funds, we're managing downstream, moving money into our last mile providers inside our own network. Having that level of regulatory like prowess really makes a difference when we think about the network. Obviously, what the bank will allow us to do is that we will issue a token. Today, if you think about it, a customer, let's take the customer I was using in Colombia. The agency receives money, they come in and let's say dollar, they hold dollar inside their Payoneer account, and then they withdraw it. That's what happens today. They hold a liability against Payoneer under current licenses. Actually, we think about the bank enabling us to really act in a very similar way with an upgrade to the way in which we run that infrastructure and regulatory footprint. So that customer, we would issue a token essentially into a Payoneer coin into their wallet. When they're logging into their Payoneer platform, they will see essentially at rest a liability against Payoneer, Payoneer Bank. And when they want to off-ramp it, we will essentially remove that back to whatever the currency or the asset is that they take off the platform. So we were super excited by that. The bank will also help us do custody, and I think this is an interesting conversation when you go through this journey. The approach of like turnkey, everything in a box, sort of on one extreme, to the other one of like rebuilding one of these entire ecosystems is a pretty wide chasm, right? And so we've started on one side for some very kind of straightforward reasons. As we go forward, we're not looking to bring everything in-house, but there are some clear benefits to bringing parts of that stack. And really for us, again, that's around that compliance, it's around that control and having that interoperability across the network. So today, if you're a customer of Payoneer, you can log into your account, obviously passing eligibility and everything. You'll see today already Stablecoin capabilities powered by Bridge sitting there ready to use. Over time, we will augment and scale that solution, and we believe that the bank is a critical part of driving that.
Right, and the OCC you mentioned, yes, it strengthens the regulatory story as well. But once the Genius Act rules actually go into effect, that essentially means the balance that is being held in the Payoneer stablecoin are actually stronger than the current way the balances are held today, right? Because it'll be a essentially one-to-one backed entity rather than a liability against a company that's holding balances against a bank. Is that accurate?
I think what's different when we think about the coin, right? So actually their Payoneer will be managing the composition of the reserves, obviously following where Genius ends up, but in a Genius compliant way. Those reserves will be spread across whatever assets and provisions. They're similar models, but I think there's obviously an upgrade in some of the requirements in how you manage the reporting, how you think about security, control, etc. around the bank. But I think one of the key things to look at is if you think of Payoneer today, we operate a very kind of heavily licensed business in many markets, including China with our acquisition last year. And so for us, actually, this is kind of an evolution of that journey. We're familiar running like large KYC, KYB programs in many, many markets around the world. We run like a very complex entity structure today. So for us, it's actually an exciting kind of evolution of that model. It's not that this is something totally different and replacing an existing system.
Fair, that makes sense. And then you mentioned reserve management and reserve composition. I think that's always interesting when many firms are asking themselves the same question. Do we issue our own stablecoin? Yes, there's the brand benefits, there's all these other things that we mentioned, but maybe you could describe how you think about it. I think maybe some folks will ask about, do you have better control of the yield? But I think already at your size, you already had pretty good control of the yield with your bank partners. And so what are the kind of the pros and cons of the managing your own reserves with your own issued stablecoins?
Yeah, it's been talking to the players in the market, you have very interesting conversations about yield. I think for us, look, our revenue model is a transactional model today. Yes, there is yield in the network. We publicly disclose what we make, right? I think one of the key bits to us is that we want, as the issuer of record and how those smart contracts are governed and built, the control that's like layered in, that's critical to us. Running a program like this just to optimize on yield is not the North Star. For us, it's basically, we believe that the bank is a robust platform to deliver the capability to those small businesses for utility. So everything I mentioned around off-ramps, everything I mentioned around custody and compliance. When you look at the kind of different models, whether it's white labeling, whether it's taking some variant of and buying software and services, I think, again, maybe you guys are close to this, but like our conversations in the market, it's still very much evolving. Like what is available, what are the models, how much control do I retain, of what do I retain, versus how much do I outsource, do I create key dependencies? I think these are some really interesting questions, and certainly one that's we've found kind of evolving. The second one, which is kind of also really interesting from our seat, is like how do you tie in essentially this digital asset stack so that all of the reserve capabilities, the burn mint processes, with all of the fiat ledgering, all of the control layer that sits on top of it, how do you think about like the ability now to move to kind of real-time systems for thinking about the data across essentially both stacks? To us, there are really some fundamental questions that are kind of top of mind right now as we look towards that issuance model.
And as I mentioned earlier, can you just describe, this is a fully self-owned kind of issuance infrastructure, or you're partnering with folks for certain parts of it?
Yeah, so for us, the trust charter will be a combination of different providers and partners. I think kind of as I started off with, there are parts of the stack that we definitely don't need to control, like, I don't need to own, right? And so for us, we should take best-in-class providers for certain components of that capability. There are some pieces that we will either buy as a service internally or connect up to internally. I think for us, it's not that we want to become a stablecoin issuer. This is what our model is today, is that this coin will be closed loop. We're essentially viewing it as an iteration of how we currently present customer funds. And so today the approach is to really leverage best-in-market partners in the most like compliant way with our requirements under the ruling.
Yeah, and I think that's right. I mean, there's so many different parts of the stack, and to your point, it's like the custody, there's like the integration with the ledger, the treasury, the recon, the smart contracts itself. These aren't like, and if you look out to the market, there isn't like a silver bullet, like one-stop shop where I can take everything and then start using it as well. And also like every use case is fundamentally different, and how you guys and your incentives and your goals around the stablecoin are going to obviously vary from like what's out of the box too. So it makes a ton of sense to just like evaluate it, fully before kind of jumping in as well. But maybe describe just like how you also want to just present the, PAYO-USD. Like we've talked a lot about abstraction, away from like the end users, the businesses. There's obviously like there's an internal like treasury recon part of it, but like, do you guys care for this to be like a branded, stablecoin in the future where everyone actually references it that way, even though it's maybe just underneath the hood? Or is it, like, hey, this is just like simply another rail, like we don't really care much about it, outside of that as well?
So I think if you think of the model, right, so back to that fund flow, I always seem to think in fund flows. So let's say external stablecoins or fiat, whatever it might be, coming in as your accounts receivable as that small business. Obviously, from our position, we want to enable as many as possible that are compliant, that we can sort of manage the risk on. But like for our customers, they need to get paid. So there's whatever's external facing, whether that's one of the larger coins, whatever it might be. There's then that currency when it sits at rest. And so if you think of our business today, a lot of customers are using USD to sit at rest. We allow them to have USD balances on the platform, whatever market they're already sitting in today. And so we think very similarly about how we would look towards that PAYO token, PAYO-USD, whatever it might be. And so again, when the customer's sitting at rest, they log into their platform, they look at their balances, we'd expect them to be seeing a balance there, which is that PAYO token that we're issuing. When they take the money off the platform, so when they want to pay some suppliers or they want to essentially repatriate those funds back to their home country, obviously we then have to like solve for this off-ramping piece, connect through down into the last mile network. And there again, the PAYO coin would essentially be burned or redeemed, and we would push money out of the platform. So as we look at it, actually, that's a very similar behavior to exactly how we serve those customers today in fiat. We believe that the PAYO coin has a lot of benefits inside that model for us when we think about traceability, liquidity, the ability to move funds like across that end-to-end chain with more speed and efficiency.
Yeah, that makes a ton of sense. I mean, it's going to be interesting to see how this plays out where, we have, there's like an interesting, just like, I think, change and evolution in the overall payment space, right? You have the SoFis, the Stripes, the PayPals, and, these are all different organizations across the board that are now exploring the stablecoin bit. I mean, I'm curious, just like for you guys, like how do you guys like think about just like the market evolving, especially across some of these other like players also, and then some folks are adopting stablecoins, some are issuing. Like what curious like your point of view when you see the market expand like this too?
Yeah, it's an interesting time looking at our seat. I think when I was talking to Chuk a bit about it at the time, trying to choose providers and partners and understand like what are real solutions, what are like growing solutions. Even when we look at kind of more adoption now by larger players as they move into the space, the use cases are so different, right? Like so many people have different use cases to solve for in different markets for different segments. And so I've been laser focused really on those B2B like flows, right? The marketplace payouts, the small business collect and send, and kind of how you see that evolving in these markets. It's interesting to see how it brings in new competitors. It allows larger businesses to innovate. I think still to me, when I look kind of a bit further out, right now there's a load of businesses creating really cool stuff, but I still feel that some of it's optimizing for stuff that doesn't deliver customer value, at least for the segments that we focus on. And maybe that's just because I'm focused on solving some of those fundamentals right now, and these other things will come. I think, look, validation's happening, right? There's like large transactions, there's things happening in the space, which is super exciting, but it still comes down to like how will these services and solutions and providers embed into existing workflows, into operations processes, into those compliance conversations in the kind of easiest way possible almost. And I think that's still for me like one of the big questions. It's really exciting to see how these businesses are maturing, and it's great to partner with them as they do so, but it's something in the fiat world that's super painful and it takes a lot of time and effort, and I think in this world that'll be the same, and I'd be excited to see how we go.
Yeah, and so it seems like the market's still developing. Maybe the news headlines are a bit ahead of where the actual market operations are. If you were to kind of summarize what are the key things that need to happen, would you put it more into the category of, well, incumbents need to just start upgrading their tech stack so that the end users get all these things in a compliant way where they already shop? Or is it regulation, more liquidity? What are the kind of the key things that will shift the reality closer to where the headlines are?
Great question. Wish I knew the answer. But I think, look, from us, like regulation is one thing. So I think we've seen maturity, more clarity coming through, and pieces sort of coming to play. I still think there's a journey, right? And you read any blog and anything, like everyone holds a view on this. It's definitely becoming perhaps what was a differentiator, but to moving towards table stakes over time. So how are you going to license these flows? How are you going to think about different jurisdictions? Certainly when you at Payoneer, We do a lot of work in like these interesting trade corridors where like different sides of those trades may be representing very different like approaches to regulation. And so looking at that from a global perspective for us is actually like a big unlock as different places come online. I think the second unlock is, again, kind of what I was mentioning, that like a lot of this capability can be leveraged by large platforms, players. How does it actually fit into the workflows? I think one, from a customer perspective, so I would view like Payoneer's role in this driving distribution to those small businesses. I need to make it as easy as possible for those small businesses to leverage the benefits. I would fully suspect they don't really care what rail they get paid on. I think they just want to get fast, speed, accountable, whatever, trusted. So I think like on one hand, that's that. I think the second one is like, how does that infrastructure and technology fit into the systems of payments businesses and on these other FIs and fintechs around the world? And I think obviously creating new systems and things are great, but also how does that dovetail with some of the other core operating systems? That to me is like a big unlock just from an operational perspective. And then to your last point on, you were sort of referencing liquidity, I think, look, utility is super interesting. I think utility to me, again, from the seat I sit in, is off-ramping, so our customers can actually use those stablecoin in a real asset somewhere for very mundane things. Utility could also be, obviously, like that's in the Payoneer account, and now you can use that for your contractor payments and for your card and everything else. But if we think of that interoperability, that getting solved, I think is a product probably of the first two bits, right? So if the regulatory and compliance infrastructure matures, if the business workflows for these platforms can mature at the same time, we'll start to see more adoption, we'll see more scale, we'll see pricing changing, etc.
One of the things that I've really been excited to see is the treasury management systems start to incorporate this stuff. And for anyone who's worked in the middle or back office or doing operations at a company, once everything is in your ERP and your system of record of choice, it's really hard to experiment with new things. You have to really be able to have the control and the agency to do that. And so I'm excited for more of the, either call it acquisitions, Ripple acquiring G Treasury, or other kind of catalysts where the innovation is driven in the systems that the customers already use. And that way they're getting their benefit, the faster payment or the more automated yield management, but they're not having to necessarily think through a new model, and everything is already, like you said, integrated into their workflows. But that's just a much more complex way to drive distribution, distribution through acquisition. But given everything that you mentioned, I think it's a key way, because folks don't want to necessarily just change their system for a new rail, and they want everything to fit through their existing kind of accounting operations, and also just kind of mental model.
Yeah. No, I think again, it goes back to, if you're in payments and you're in fintech, it's really exciting. You want to build those things. It's something that you live and breathe. But I think if you're running, whether it's a small business or a large business, you're doing a load of other stuff. I think you're familiar with the tools. Replatforming some of those core systems is a big lift for an incremental rail. And so if the fintech services, the other providers are able to find a way essentially of connecting the workflows, it's going to be a material unlock for actually who's operating this system.
Okay. Before I go into another tangent on AI and how AI can help to connect those two systems together, you've done a lot of work in this space, and a lot of it, like you mentioned, relates to cross-border and your customers, and you've audited a bunch of the different firms and thought through where the benefits really are. So for the operators and builders who are listening, maybe you could just give them your top one or two bits of advice for actually implementing stablecoin infra, and maybe on the flip side, it's something that they're probably underestimating that you guys figured out was more important than you thought.
I would say, being totally honest to people listening, we're on our journey, right? So we've started, we've done some parts, we've integrated and embedded, and I think, with everything, the deeper you get into it, the bigger the kind of chasm is as you kind of go. So I would definitely say we're still kind of opening that Pandora's box up. I think some of the things that have been interesting to think about, though, one, I think depends on the providers, but it's a young space, right? A lot of the companies that are like the household names almost in this space have only been around for not that long. And so we had to have like a mindset shift a little bit on how we think about like the expectations of their platforms, their infrastructure, their technology, the like scale that we operate at. And there's kind of like an open-mindedness to generally partner, right? And so I think that was one, just from a mindset point of view. I think the second one is like, again, some of those really fun pieces around like return flows and like payment tracking. I think happy flow, everything's great. Like, so if everything stays in a happy flow, as always, I guess in fiat, great. But actually some of those unhappy flows are really painful. And so trying to work out like how you do return flows, how things are on a balance sheet or not on a balance sheet. Like these are really like thorny conversations that we spent quite a lot of time trying to unpick, trying to optimize for some of them. The other one is that we recognize that the space is evolving so quickly, and the decisions that we make now, the landscape may look entirely different in 12, 18, 21 months time. And so we're trying to build, with at least the approach that we've taken, some flexibility in the platform for how we create this. And whether that be in the integration points or whether that be in the kind of regulatory constructs, like we want to make sure that there's a platform to deliver what we need today, which is how do I get customer value in the markets that matter for the customers that need it? How do I make sure that I'm essentially tying it into the core parts of the platform that are important to Payoneer from a differentiation and a business process point of view? So compliance, payment ops, reporting, recon, like these things. And then how am I thinking about the future? Like how do I build out the regulatory footprint, like with the trust charter? How do I think about the end-to-end flows that need to be fully interoperable between fiat and stablecoin? How do I think about in a future state whether we're doing things on-chain for more of that payment flow that I described? Like all of these things sort of come to mind. And what we've kind of worked out, obviously, like it's great spending hours and hours whiteboarding this, but the reality is like we actually have to go build something and get something like up working with some degree of comfort with that ambiguity down the road. And obviously as a small startup, I think that's probably a mindset that's a lot more familiar to you. But for some of these larger businesses, I would say that takes a bit of thinking.
Yeah, that's helpful advice. And, some I'll take away in including that, and also thinking in fund flows as well, key when talking about payments and financial operations. So this has been fantastic. Rowland, always great to chat with you. Where can folks learn more about yourself and then PAYO-USD, Payoneer in general?
Yeah, so I guess like all of us, I'm on LinkedIn, happy to take like reach outs. But I think for us, like super interesting, if you follow us today, we're kind of on the journey. We've announced the waitlist and the wallet. Happy to like have people reach out and engage.
Awesome. And you, Raj?
You can find me on LinkedIn at Raj Parekh and X at rparekh. And then you can find more about Monet at monet.xyz.
Cool. And for me, stablecoinblueprint.com, LinkedIn, Chuk Okpalugo, and X, Chuk_XYZ. Rowland, this has been fantastic. Thanks for coming on the show.
Thank you, guys. Thanks for having me.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.